Hey guys, welcome back to the channel. This is Future Trading with Mike. Today is July the 20th. It is Wednesday morning. Shortly after the market opened up, it's about 9:42 right now. The topic at hand today, which I want to talk about, I'm going to jump into here in a second. Before I do that, I want to just thank everyone who's currently subscribed to the channel. I always like to give my thanks at the beginning of my videos. Current subscribers, thank you for subscribing. And if you are a newcomer or new watcher to the channel today, stay tuned, watch today's video. I have tons of videos on the channel which you will find that surrounding price action trading and the style of trading in which I trade, which is basically supply and demand. I trade supply and demand. That's my go-to. And why? Because it is a very profitable way to trade. And I simply put, you're trading and kind of moving with the bigger players at hand, the institutions, market makers. So with that said, if you're a newcomer, guys, please watch the video here. I'm sure you'll probably find the video pretty impactful or packed with tons of information. But in these videos that I do sometimes throughout the week, because I am mixing things up now, I will, for those that may be asking about, how come I haven't done a live trading session video this week, I will probably be posting one tomorrow. So I stopped posting every single day of my live trading videos. I was doing that religiously for months. So that's why you can go back on my channel if you're a newcomer, and you can see the channel jam-packed with my live trading recorded sessions, okay? But where, it basically shows me trading the market, the ES futures, which I trade the ES futures, the Emini S&P 500 futures each and every day, and I record it for my own self, just to kind of reflect back, look at the market's move, see where I took my trades at. But I talk about and go into detail why I took certain trades surrounding the strategy that I use. But yeah, so if you're a newcomer, please go ahead and subscribe to the channel right now. And make sure you click on that little bell icon next to the subscribe button so you never miss one of the uploads here on Futures Trading with Mike. And I'm sure all the other traders that have subscribed to the channel would definitely appreciate you and having you on the team. We also have a Discord community that's up and running at Futures Trading with Mike. So it's on Discord. So if you're interested in joining that, just find the link down in the description portions of this video. Click on invite and invite yourself to the channel. The Discord channel is a community filled with active traders across the world, to where we talk about certain topics, or kind of like a question and answer type forum. Basically, we heavy hit each day and looking at the market at hand during the session, and kind of point out levels, give tips. We talk about levels that we're going to trade from. So it's just a lot that goes on and is discussed in the community. So it was created for fellow like-minded traders like ourselves to kind of, come together, have collective thoughts, and share ideas on the channel. So that's what it was for, okay? So without further ado, let's go ahead and jump into today's video and talk about today's topic. And that simply is why I do not or don't trust trading indicators, okay? I learned this many years ago, and I'm not bashing or saying bad things about any particular indicator that you guys may use. Trust that, okay? Because you may use certain indicators that help you out in a strategy, or however you trade, whatever the case is, it may help you out. But me particularly, I am a pure price action trader. I read market structure, follow price action, looking at price movements, but I don't trust trading indicators, and I'll talk a little bit about that, and going more in detail about that. And excuse me, for all those that are looking at my charts right now, yeah, you see a couple of things added to my charts, and they've always been on there, like the yellow line here, the VWAP, okay? Do I trade it? No. Do I talk about it in my videos? No. Other traders have asked about it, and it is the volume weighted average price indicator. I don't use it. I just kind of, years ago, I've added things to my charts, and, over time, as we evolve as traders, we kind of test the waters to see what works and what doesn't work for us. And I just learned, I've been trading for 10 years now, and probably the first 3 years of my trading venture, trying to, learn to trade, I struggled, okay? I struggled because I was jam-packing my charts with so many indicators, testing this indicator, testing this indicator, testing this indicator, and I was just piling up things on top of each other, and it was confusing me. It did not work. So that's when I kind of said I need to go back to the beginning, from scratch, start over, clean slate, and see what actually works. And the thing about it was I really didn't know how to read price action 100%. So that was probably the kind of the turning point for me is going back, cleaning my charts up, taking everything off my charts, because someone told me the first thing you want to be able to do if you're starting out trading, and you could use this, you could use this going forward once you learn how to read price action, is read price action. Start from the beginning, understand how to read the market and read price action, okay? But you always got to be able to look at the market structure, the structure of the market, to kind of figure out, which direction is the market moving, whether it's short term or long term, okay? But outside of that, the second part of that, it really is, I've always say this, is price action. If you cannot read price action is not saying it's the Holy Grail, but it is the Holy Grail in a sense, because if you can't read it, then you can't trade. You will not be able to trade. You will be taking trades. It'd be like blindfolding yourself or being blind, and you can't read the market, okay? You have to be able to see the ebbs and flows of the markets and know where the market's going to come back to. Point case in being, certain areas of where price, has accumulated position, where the market has accumulated position, where traders have put positions on in an area whether there's aggressive buying or selling, and that's how I trade, supply and demand. But I don't want to get heavy-hitted or get into too much talking about that. I know I'm kind of a fast talker sometimes, guys, because I have a lot that kind of, in my mind that I'm kind of like thinking about and I want to put out. But yeah, trading indicators for me are a no-no. The reason why is because they lag. They lag behind price. If you haven't really paid attention to that, which from the beginning I really didn't see it to the eye. So I would see price move, and then the indicators were moving with it, whatever the case is, whether it's the MACD, RSI, whatever indicator you use, it doesn't really matter, because there's tons of them. If you simply click on where is it, right here? Click on NinjaTrader 8 if you use NinjaTrader 8 or any trading platform that you use, and you got so many of them. So many of them. You got the ATR. I used to use like the ATR, the RSI, the MACD, the typical and standard indicators that most people use. There's so many of them on here. What other ones did I used to use? Let's see. I think those are probably the main ones I use, like the MACD, the RSI, the ATR. Yeah, pretty much those are probably the main ones that I use. I'm sure I've tested out some other ones in the past, and I was just stockpiling them up on my charts, guys, trying to see pretty much trying to analyze. Oh, if this indicator does this and this one does this, then I need to jump in the trade. It was like playing red light, green light, and that did not work out for me. And I quickly learned, because I was getting, I got burned a few times. I quickly learned that I had to go back to the drawing board and start all over again. And like I said, that was kind of a turning point for me when I started to be able to truly understand price action. That was kind of like my eyes open up then. And someone, like I said, said to me that if you can trade price action and trade pure price action with a naked chart, then you're good to go. And once I figured that out, it clicked, and then I kind of stuck with that. Some of the things I have painted on my chart here, like I said, painted on my chart, like the VWAP. Yeah, that's on there. I just kind of like, it's kind of like having a Christmas tree and putting decorations on it in a sense. I have it on there to kind of make my charts look pretty, whatever the case is. But do I use them? No. You never hear me talk about them in my videos, trading around certain, certain indicators, whatever the case is. Now, cumulative delta, you've heard me talk about, because that's different. To me, there's a difference when you're trading like with a level 2 indicator. Level 2 indicator is it's like reading the tape, like reading the time and sales. It is moving with price, because those are the orders that are flooding the market, that are coming to the market. So as prices, as orders are hitting the market, you see cumulative delta shift real quick. And if you're looking at the time and sales, all the cumulative delta is, this representation right here, is just a picture representation of what's going on the time of sales, without actually seeing, the bid and ask side of things, and seeing the orders coming in on the bid, or hitting the bid, or hitting the ask, one way or the other. But that's what the cumulative delta is. It kind of paints using a candlestick, or candlestick kind of image, or whatever the case is. It's kind of painting a picture of what falling behind price. And sometimes you'll see price doing one thing and cumulative delta doing something else, and that could be delta divergence, they call it, or whatever the case is. There's so many different ways that people trade. But I do have the cumulative delta, which is an indicator or tool, but it's a level 2 indicator that is moving as price is moving. So meaning real time. It's not lagging behind. So typically speaking, when you start to see large influx of orders coming to the market and you start to see price popping up to the upside, then that's why the power comes from using the cumulative delta, because sometimes not sometimes, whenever there's large orders that are hitting the market, say for instance, like I just said, the market will push higher, or large sell orders coming in, and you'll start to see cumulative delta go to the downside, price starts to drop to the downside. So that's why I have cumulative delta. Do I trade strictly 100%, following cumulative delta? No, I don't. Do I trade delta divergent? No. Did I ever? Yes, I did. So I've used certain strategies in my trading in the past years ago that just didn't work for me until I found and started really searching and really doing my research in supply and demand, and that opened the doors up for me mentally, 100%, because then I started to understand that I need to be trading like the institutions, that I need to be trading like the big boys, that the market makers, the ones that are actually putting the big money into the market, investing big money into the market to keep the market moving. Okay, the market doesn't sleep; it's always moving. Even on the weekends, when when the exchanges aren't open, the market is still moving, whatever the case is. So it's just not tradable during the weekends or during holidays and things like that. But yes, that's pretty much the main reason why I do not trade. It's probably the only solid reason or answer that anyone could give why they do not trade using indicators, because they lag. They are not moving with price. It's just like, take a close eye look at them yourself. When you see price moving and it may start moving heavy to the upside, look how long it may take for that indicator to kind of follow suit. Like if you're using like an indicator that kind of looks like a line, it'll start like doing like this, and then flipping or whatever the case is. It's trying to figure out what price is doing. As price is moving, then it starts to move. Price starts to move higher. Then it wants to move behind it. So it's not moving, hand in hand with price. So that's why I do not use nor trust indicators. Some people use EMAs. There's nothing wrong with EMAs. Even though EMAs or SMAs, I prefer EMAs over SMAs in a sense. But EMAs, which is the exponential moving averages, people add them to their chart. I don't have one added to my chart. And if I was to say to use one, depending, maybe the 50 EMA, whatever the case is. All the EMAs pretty much do is help you kind of gauge the market and what kind of direction you should trade. But then again, like I said, it's lagging as well. So if I have a short bias and I want to take short trades, if price is sitting below the EMA line, and I have a short bias, each time price pulls back, as long as it doesn't break above the EMA, say for instance, and then I see rejection, I'm going short. And then the opposite, if price is above the EMA and pulling back, whatever the case is. But those are just kind of, how people kind of trade using EMAs. It's more so a tool or a gauge that kind of helps you mentally in your mind. Hey, price is below, we're shooting lower. The market is trailing to the downside, whatever the case is. My bias is short, price is below the EMA, I'm going short. So it's just how you can tweak and use indicators however you're going to use them, whatever the case is. But some people talk about how the crossing of indicators, meaning like EMAs or SMAs, whatever the case is. If this is crossing with this, then I'm going long. Whatever the case is. So I guess they more so trade based on time reference, in a sense, wanting to see and waiting for certain indicators to do certain things. I don't trade like that at all. It's just like I don't find any any probability in that type of trading or whatever the case is, because the move's already happened. Why would you want to be not in the move while it's happening versus being in the move after it's happening? Prices, I'm telling you, if you take a look at things really closely, you'll see as that price is going to move quicker than that indicator will. So by the time price has already moved, and then you jump into that trade, and the indicator finally makes its mark and makes its move, guess what? Price is probably going to pull back, and then you're going to get stopped out, whatever the case is. So you have to find a way to trade that is going to be more in your favor, and then where you have a higher probability of trading. And that's why I'm saying that price action. I mean, you can 100% trade based off a naked chart. And if I was to recommend, if someone was to ask me, I'm a newbie, I want to begin to learn how to trade, I'm going to say spend more than spend 75-80% of your time or more, learn price action. Then I'm going to say All right, you don't understand price action. Show me what price action is. You know, give me some. Let's look at a chart and you know kind of read to me what you see going on, whatever the case is. All right. So from there, I'm gonna say, well, trade a naked chart, nothing more, a naked chart. Okay. And when you can do that and you can trade pure price action, just trading based on price movements, looking at areas, because you can use your eyes and you can see within the market without even using the volume profile. We're talking about the volume profile too, okay? Is the volume profile an indicator? Yeah, it's a tool. It's an indicator. Do I use it in part of my trading? That is probably one thing that I do use because in my trading, I talk about this more so. You've always heard me and saw me trading around the volume profile. I would say buy the lows, sell the highs in relation to the volume profile. Why? Because anybody that knows anything about trading, what's singly handed outside of understanding price movement, the other most important thing, volume. Without volume, we have no price movement. Without volume, we're not able to reflect back to see areas where, you know, there may be an accumulation of buying or selling, in areas where price, you know, where a lot of transactions took place, a lot of trades took place. That's why volume is important to me, okay? All right, I don't want to sit there and look at the histogram part of the volume and see, oh, prices is the volume is getting thicker here, it's increasing, whatever the case is, or, you know, I see a low volume node, you know, because sometimes you'll see volume, when you take a picture of volume as prices move throughout the day, the histogram will, you know, start to build, or whatever the case is. And then you're going to have those little low areas, what they call, you know, kind of dips, or whatever the case is, which are low volume nodes. So I pay attention to things like that because it's areas where there is influx of volume and influx of transactions that took place in the market, or orders put on in the market, versus areas where there's less amount of orders that or less transactions that took place, if you want to say, whatever the case is. So volume is extremely important to me. But as far as using the indicators that you find that most people use and trying to trade and follow behind them, like the Williams percent, the RSI, the MACD, ATRs, I don't use any of those guys. You know, I really don't. I have the VWAP on my chart. Do I use it? No, you've never heard me talk about me using it, you know, at all. A lot of stuff, some things I have on my chart, I'm not going to say a lot because I don't have a lot on here. Now, it's just added to kind of make things look prettier on my charts. I mean, basically, I could take everything off my chart. Everything off my chart, including volume profile, and be able to trade. Does volume profile give me an edge? Of course it does. If I was to say to trade, and you would ask me, what would you trade? Which if you had one indicator to choose, which indicator would you use? And that's kind of, I could do that in a separate video in a sense itself, you know, because that's like it's a good topic. I would say the volume profile. Because it's hands down, it's like volume is the most important thing outside of just like being able to read pure price action. I just said that. So volume profile, you know, that would be like the most important thing because I got to be able to see what the market, you know, what it was doing at a certain area when I'm interested in trading a certain zone or level, whatever the case is. You know, I want to be able to see volume in that area. Was there a lot of volume in that area? If so, then if price comes back to it, I got a higher probability that price may react in that area. So, hey, you guys choose to do what you want to do when it comes to using indicators, whatever the case is, because I'm not here to tell you one way or the other how to trade them or to use them. But in my trading, I don't trust indicators. Bottom line, I do not trust trading indicators, okay? And because I found that they just simply do not help me and never have helped me be profitable in my trading. It's simply put, okay? But I'm not going to tell you guys what to do. But outside of that, guys, that's pretty much all I had. That's what I'm talking about, that one little topic there about the indicators, and they lag behind. Trust me. Just kind of pay attention, look at price, and then you can look at, if you pay close attention, you can see, look at that indicators doing versus what price is doing. You'll see price is making its marker move before the indicator is, okay? So that's all I have for you today. I know I kind of, you know, hit a few things a couple of times. You may say, oh, well, you know, he keeps saying the same thing. I'm trying to clarify things and really trying to talk about topics to get you guys to kind of understand from my perspective why I do not do certain things when it comes to trading, you know, indicators, or why I'm talking about this topic, because I'm giving you point of reference, or giving you my idea, my opinion of what worked for me, what didn't work for me in the past. Because I've been trading for 10 years, and a lot has happened in 10 years for me to be able to come to an area in my life where I'm profitable trading, okay? Was I profitable trading the first 3 years? I made money, but then I lost money too, you know what I'm saying? So, but did I I learned very quick on in trading when I was starting to learn to first of all, not trade large size lots. Secondly, don't put on huge risk when it comes to putting on a lot of money, putting on a lot of risk. Is what I'm trying to say, pretty much. Yeah, putting on multiple contracts on whatever the case is. So I wasn't one of those people. I was very particular about how much money I traded with when I started trading, meaning how many contracts I got into the market with, because I've seen so many people, I heard so many people always told me that don't blow your account, because it happened real quick. I was young trader then, and I just knew what they were saying, but because it never happened to me, I never really thought about it too much. I said, oh, that's not going to be me, whatever the case is. It happens to the best, Now, do I have a story to tell to where I lost large amounts of money before I started learning how to trade? No, I didn't really lose a lot of money because I didn't have a lot of money to actually start trading with. And so I safeguarded myself and my nest on that end of things. I was a little smarter than just, thinking that and being foolish that I could jump into the market and start making money real quick. Didn't work for me. I didn't follow suit like that. I didn't have the kind of money to trade with like most people may or capital they have. And I wasn't going to be foolish to take money that I had in savings that I knew I had to pay bills with, or money that I had in savings that I wanted to be able to do other things with. You have to, hey, savings are for a rainy day. And that was the thing with me. It was like I wanted to protect my nest. So I took a little money and I started kind of dabbling in the market, but it was nothing significant that I lost before I started learning, really the right way to trade, because I've always been that type of person to where I'm not going to be foolish and jump into something, even waist deep or even head first without even fully knowing what I'm getting myself into, and then, really get myself in quicksand where I can't get out, pretty much. So I was a little bit smarter than that. I took my time, climbed the ladder, fail, climb the ladder, fail, climb the ladder, fail, without taking on too many losses, okay? Meaning, losing a bunch of money in the market, okay? But outside of that, that's all I have for you guys today. I hope you appreciate this video and the topic I'm talking about, because I'm sure there's someone out there who's watching or subscribing on the channel that probably says, man, these indicators don't work, or trust me, I've tried them, and when I started using indicators, I thought they were the best thing ever. Like, oh man, yep, I'm gonna use this indicator here, I'm gonna make money, and then it didn't work. And then I tried something else, and then I tried something else. So I'm not telling you to stop trading if something works for you. If you got an indicator paired up and made part of your strategy, whatever the case is, continue to do it. Okay. Never have I once tried to steer anybody away as far as like trying to tell them trade this way. If you don't, then you're gonna lose money. No, that's not me. Whatever works for you works for you. Okay. I'll leave it like that. Take care. I'll see you guys in the next video. Goodbye.